Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is March 11th, 2025, and today on our call we have the CEO, Riley Taggart from Cleantek Industries. Cleantek trades on the Toronto the TSX Venture Exchange under the symbol CTEK or CTEK, and it also trades on the OTC under GLKFF. The company is currently trading at 41 cents with about 29 million shares outstanding, or about a $12 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Riley, great to have you here. We've been following Cleantek for quite some time now, and I know a number of our audience are actually shareholders. So great to have you here to not only get us up to speed, but probably more importantly, just to get everybody to understand what Cleantek's all about. So why don't I hand it off to you, and you can start your presentation.
You bet. Well, thank you very much, and I really appreciate the opportunity to be here today. Excited to walk you through really what is a reimagined or re-engineered version of Cleantek. As you mentioned, Cleantek has been around for a number of years and has got a good deal of market awareness. But that's something that we're really hoping to engage the market on here into 2025. So forums like this are a terrific opportunity for us to tell our story, to tell you what we've been up to for the last year, and hopefully garner some further interest. As you mentioned, my name is Riley Taggart. I've been with the organization for just over a year now. I joined in an executive in residence position in February of last year, and then took over the chair as CEO in July of last year. So it's been a very eventful year and a pretty exciting time, I think, for CTEK and for this microcap environment. What I'll do is I'll walk you through our kind of generic investor presentation, and if there's any questions, I'd welcome those. I also want to point you to our websites, cleantekinc.com. We're just in the middle of refurbishing our website, so keep updating, keep checking in, and you'll see our new brand and our new website here shortly. As you probably see very often in these, I want to just mention any statements that I make here are any forward-looking statements that I make here in this presentation are made with the best possible knowledge that we have and are as true to form, but there are no assurances, obviously, in the public market and in the energy service and industrial market for sure. Maybe what I'll do is I'll give a little bit of an update on the company for those of you who are maybe less familiar, and then I'll get into the granular components of what makes Cleantek an opportunity for operators, customers, as well as potential investors. So Cleantek as a business, we've indicated to the market here in January that we're very bullish about our general direction for 2025. Our overall guidance that we published in January suggests that we'll achieve about 20 to 30% increase in revenue, and obviously we'll have an adjoining increase in EBITDA. So we're very excited about the momentum that we have in the market from a sales perspective, and also about a lot of the internal initiatives that we had started off in the latter part of 2024. When I came in, essentially we took a three-part approach to where we were going to go with the business. The first was really a triage, understanding what elements we had within the business. The second was trying to initiate that strategy and engage with the market. Forums like this, for instance, a wonderful opportunity to tell the story, to get some interest in our share price. And then the last is to pursue our next step as an organization. And as we've indicated through a couple of our press releases, those will be exploring the M&A market or further inorganic expansion to compound our already organic opportunities. I'll talk a little bit about our executive team. We're very fortunate as an organization to have some very seasoned support for myself. Orson Ross is our CFO, and Chris Murray is our COO. Both gentlemen are well versed in the business. They've been in it for several years. It's very strong technical. Chris is an engineer by trade, and Orson has his CA. So we have a very accomplished group to support, and I feel like we work very well as a team to kind of devise our new strategy and move forward. And it's a very collaborative network that we've got here as a team. What Cleantek is really about is a clean technology industrial company. So the predominant sector that we focus on is in oil and gas. However, we do have some industrial and construction exposure, and we've actually invested in our sales organization to expand our presence in that construction space. But really what makes Cleantek today is our concentration down to two main cores of our business. That's water solutions and sustainable lighting solutions. And I'll go into greater depth in the subsequent slides about what each of these technologies are. Many of you may be familiar with them, but it's really the reinvigoration, making sure that we're astutely monitoring the market and pursuing kind of iterative designs of our current offering to make sure that it resonates with our customer base. But I'll just quickly list our D0E, which is our waste heat water evaporation units, our EcoSteam, which was traditionally known as the Clean Steam units and has been a big part of our kind of ramped growth into 2025 and a big part of our investment strategy. And then our well-known legacy products is, as far as Halo and Halo SE, is our new saleable line of product, and then a very large inventory of solar hybrids, traditional light towers. We are also very fortunate as an organization to have an incredibly diversified and blue chip customer base. Our footprint stretches from northernmost location of Grand Prairie, Alberta, all the way down to West Texas and into the Northeast United States. And we also have an emergent business in the Middle East. So we have, for the size of our organization, we have an incredible reach around the world, and we look to exploit that. And I think that's one of the things that I take an incredible amount of pride is our level of customer engagement. We do a good job from a sales perspective creating the leads, but we also do a fantastic job as an operations organization engaging in a customer-oriented way in the field. So I think the ability or the fact that we've got such an illustrious customer base, and the fact that we're able to grow and expand that customer base, I think that tells you that we're punching above our weight, I think, as an organization. What I'll do is I'll jump into with a little more specificity into our actual products. Again, we've broken it as we looked at our organization here this last summer and fall. One of the key things was to distill our message and distill our focus down to our subject, specific subjects. And out of there, we would build product lines within it. And so again, that's where we devised our water and lighting kind of core pillars. And within each of those, we've got product lines. So the first, and probably one of our more well-known products, is a D0E. This is a truly environmentally friendly solution. The D0Es we have traditionally run in conjunction with waste heat from drilling rig units. But we are exploring, however, the application of these units in other faculties. So whether it be on the tail end of a compressor, other large capacity engines. Essentially what we're doing here is we're using the wasted heat out of the exhaust, piping it through our reactor and using that as our heat source for evaporation. So wastewater volumes are evaporated without any additional energy input. So no further diesel fuel or natural gas to burn to achieve that evaporation. The wonderful thing about that is it's a zero cost input. It's also a zero emissions input or export. And it's a very much a sealed unit. So we don't have to man these units. We rig them up. They sit there on location, piped into the exhaust column, and from there we're able to evaporate the wastewater offsite. A sister product to this, and maybe one of the better known pillar products of the traditional Cleantek business, was the Clean Steam. The Clean Steam had served as kind of one of the core investment opportunities of the business in early days. It was a diesel-powered water evaporator, and the company had built up a vast inventory of these over the years. We currently have 40 of those units still sat against the fence, but as diesel prices have increased over the years, and we've become more conscious as an operating base about emissions, the utilization of that fleet has really fallen in the last several years. Through the early stages of engagement with our ops and R&D, we highlighted this as a particular opportunity for the business. Again, incredibly low utilization of that Clean Steam. Our R&D group, working closely with some of our operations staff, was able to kind of reimagine how we could get those units reinvigorated and back in the market. And it turns out that we have, with an incredible stroke of luck, we have an opportunity to move those over, to port those over to natural gas burning units, which has been very well received by our customer base. I've indicated to the market that I intended to swap 25 of our units from diesel burning units into natural gas units. And so far that we are on target. Every one of the units that we've got built today has been deployed. We've shipped our first of these units to the US, and we hope to ship a further set of these as we're building them in batches of 5. So we hope to ship another 5 here in short order. But these units, obviously, we're using an underpriced input in natural gas and achieving, again, some environmentally stable or environmentally prone results in that we're eliminating trucking off location and also reducing wastewater. One of the things I like about the evaporation business is that we move away from producing pure wastewater. The fact that we're able to evaporate off about 80% of water volumes means that we're taking trucks off the road, but it also means that we're reinstating a freshwater column into the environment rather than pumping that downhole into a permanent state like you would with a disposal well. So to me, it's a fantastic opportunity to help both the environment as well as our operators. And customers are all too happy to pay our day rates when they can take out the added operational risk and cost of taking trucks and facilities out of the loop. Moving on to our sustainable lighting, and probably our best known product within the lighting solutions market is our crown mounted lighting. One of our real initiatives for 2025 was to move with some more intention into international markets. Our Halo product line has traditionally been our rental product, and that services the North American market. And Halo SE is our new iterative design that we've used to expand into the international market. And I've just recently issued a press release kind of waving the flag on some of our near-term wins that we've had in that expansion. So we're incredibly excited about the traction that we have in that space. Again, the impact of these units is we're taking out independent light towers off location. Those are added, diesel burning engines that we're taking off location, and we're wiring ourselves back directly into the drilling rig generators. So again, an ecological impact as well as a cost impact for our customers. Not to mention the incredible light quality that's received on site and the added safety component to having that well illuminated site. Again, Halo is a patented technology that we're very proud of in the business, and it has been a traditional driving force of the business for the last several years. We're continuing to invest in the iterative design, but also just the build out of these units. One of the main objectives that we had as an organization last year was to really dig into our US sales. 2024, as many of you probably know, had shown softened sales in the United States. So we invested very heavily in refurbishing our US sales team, and that's paid real dividends here into the latter parts of 2024 and into 2025. So we're incredibly excited about the prospects of Halo, both domestically in our North American market, but as well as the international saleable market. So what does that mean, I guess, from an investment standpoint? And maybe what I'll do is just give you a snapshot of some of our key highlights as an organization. I think there are a couple of things that maybe are not well highlighted or understood about Cleantek. Today, as mentioned earlier by Trevor, we're at about 41 cents a share off of our 52-week high, but obviously there's been a tumultuous couple of weeks in the market. But we're very excited about some of that traction and the volumes that we've seen since really the latter part of 24 and into 25. So I feel that that's in large part due to our engagement with the investor market. We're very fortunate that we've got Pillar 4 Capital, a private equity, Calgary and UK-based private equity group that holds about 27% of our shares. The chairman of our board is a member of Pillar 4, one of the founding members of Pillar 4, and he's done a fantastic job at helping me engage with the market and provide some guidance there. So we're very excited and very glad to have Paul on our side. Insider ownership is currently about 45%, and as I mentioned, Pillar 4 owns 27% of us. We do have 3 debt facilities. Now, not all of these are drawn. We have a $6.8 million term debt that's at 8.2%. We have a build loan that we call it. It's a $4 million secured loan that we have not anywhere near fully drawn. I think right now we're just sub $1 million drawn on that. We're using that largely to fund our CapEx budget for the year. That's at 7.75%. And then we have an operating line that's currently about $1.2 million drawn, capped at $2.5 million. So we are, I think, as an organization, much happier about our debt position and our ability to service debt. One of the real points of interest early days in my time here was making sure we understand how we best partner with our banking partners, give them the level of confidence that they feel they can invest alongside us by offering us some debt. We don't want to extend our debt any further. We're actively looking at ways to carve off pieces of it and really get our ratios within to a point that investors will be incredibly interested by it. But I feel like we've got all the right momentum there as a business to address. For our guidance that we offered in January, we had suggested that we would grow by about 20 to 30% in top line revenue for the year. And gross margins, we expected in EBITDA margin, we expected continued improvement to about 30%. So we've forecasted our EBITDA landing spot for 2025 to between $4.5 and $5.5 million. And one of the other really wonderful things about Cleantek is that it's enjoyed very strong gross margins and actually had stronger gross margins in Q4 and in Q1. I would attribute that largely to our cost saving efforts and our lean model that we adopted in the latter part of 24. That's really started to pay dividends for the business, I think, and will be a large reason why this business is sustainable going forward. One of the other interesting things I wanted to list very quietly about the business before we wrap is our tax pools. So I imagine many people wouldn't know this, but the company holds about $75 million in NCLs. That's a carry forward from the legacy business. Obviously, Cleantek had RTO'd several years ago and carried through some losses through that acquisition RTO. So what that means is as a business is a tremendous amount of value in about $17.5 million worth of deferred tax asset. So that as an attractive lure, we think, for the M&A market. And one of the things that as we have these discussions with potential targets, one of the elements that we like to highlight as a business as a kind of a pocket of value that may not be recognized by the market. As I mentioned, we've got an incredibly accomplished board, and I'm very fortunate as a CEO to have such a strong board. Paul, as I mentioned, is our chairman. He's with Pillar 4 Capital, but we also have Chris Lewis, Phil Nolan, Al Stark, all very successful gentlemen that are incredibly involved in our business, and I feel very fortunate that I can engage them as often as I do, have them weigh in on our decisions and directions, and I'm truly blessed to have that at my disposal. That sums up my kind of encapsulates my summary for the business. I don't know, Paul, if you've got any kind of immediate questions about our presentation and where we're going.
Yeah, no, I appreciate that, Riley. Just a reminder, everybody's listening, if you do have a question, please use the chat function and I'll make sure that Riley gets that question answered. Let's talk about a little bit about the markets you're addressing. So you've got a couple different products, but maybe give us a sense of what's the addressable market, maybe in let's say, break it down into either Canada or wherever you're really serving. How many of these ecosystems or steam systems could you sell, or could you rent, or could you, what does that market look like?
Yeah, and I think we broke that into kind of a two-part answer for you, Paul. I think the first one, the immediate one for 2025, is the conversion of our clean steam units into EcoSteam. So we've got 40 of those units that are candidates for conversion. We've indicated that we'll do 25, and if we continue with the market absorption rate that we've seen, we'll do all 40. If things slow down, and we're gauging the general North American North American sentiment in and around exploration and operating for oil and gas. If that continues to be as strong as we hope it will, we'll build all 40. But you allude to, a larger trend, and I think that's one of the incredibly interesting things about the North American market, and even the international market to some degree, is the attention to produced water and wastewater volumes and their treatment of them. If you kind of dig into that market, there's a growing concern over how disposal volumes are handled, whether it be, West Texas has their own issues in and around wastewater disposal. So whether that be injectivity issues or reduced capacity for the injection wells, they're looking for new and alternative ways to generate waste solutions. And I think we're very fortunate in just that we've been traditionally aligned with that business. And so we're exploiting that sort of traditional exposure. One could build up, these units do about 10 cubes a day. So, you could build out an absolute army of these units if you were so inclined. One of the things that I think we're incredibly excited about as a business is exploring larger capacities. And I think that we currently offer in the lower site-centric volumes, but I think that our expansion will be into much larger volume units. So, and I don't want to give away too much as far as what we're investigating, but maybe it's into a turbine-supported solution, or another energy input into evaporation columns. So that market is virtually limitless. We worked up a TAM for that market, and I almost didn't believe how large it was. What will be critical there is to what extent the traditional produced water market maintains, and how much of that market is morphed over into new and innovative methods. For us, it's really an effort in creating very cost-conscious solutions, and I think that's one thing that Cleantek has done very well. So obviously with the D0E, with zero input cost, that's very attractive to operators. And then the clean steam into EcoSteam conversion, we've had tremendous success, because those units, just by good design and good fortune that those units were built bomb-proof so many years ago, remains a very efficient solution.
Mm-hmm. And I mean, this is a neophyte question, but like you're reducing the amount of wastewater, but what happens with whatever's left? What do you do with that sort of residual stuff?
Yeah, so we evaporate off roughly about 80%. We get down to 20% solids in the water. That still, unfortunately, is destined for the traditional, disposal facility. So, I mean, we can't get rid of the entire waste volume, but even eliminating 80% of it significantly reduces trucking and infrastructure needs, and also obviously salvages a large volume of water, pushing it back into a freshwater state.
Mm-hmm. And then give me a better sense of like what does the business model actually look like? Typically, does one of these units get on a site, and then once it's done, it goes back to you guys, or do these things stay in the hands of your customers? Maybe give us a little bit more, even like what's the day rates, or how do you charge these things out?
Yeah, I don't want to give away actual day rates, but they are. It's on a day rate rental model for the North American market. Obviously, it's talking specifically about our water market with DZ and EcoSteam. Those are our day rate units. So there's no additional input costs, like I said, on DZ, and natural gas is supplied by the operator. So there's no variable costs that are associated with our operation. But yeah, they're generally very long-term rentals. So the first EcoSteam unit that we had built as a prototype in late November of last year is still on location today. So they are long-term deployments. As long as the rig is moving, or the rig is sitting there operating, and the DZ will sit there and operate. So whether they're loading it with water volumes every day is up for discussion, depending on the waste created. But yeah, they sit there on long-term deployments.
Mm-hmm. And when an investor looks at some of these units, like can you talk about payback? Like how do we sort of understand the payback of one of these units, and how long do they last as well?
Yeah, well, we've got the original, as I mentioned, we've got some of the bones of the original clean steam units still on the road today. Now they've been refurbished. So but the conversion of those units are paid back in 58 days. Wow. So we're super fortunate there, in that it is such a low dollar conversion, where that was one of the big appeals, right? We wanted to come up, we knew that we had value in these kind of underutilized frames, and we wanted to see if there was an opportunity to reinvigorate that. Obviously, as water as a growing discussion topic, we knew that we were kind of in the general neighborhood of interest, and so it was really engagement with some customers, understanding what they'd be willing to pay, and then looking at the input cost to make those conversions. And we were very fortunate in that it was such an easy swap over between the swapping of the burners and then reconfiguring a gas train, and redeploying the assets. The conversions can be done with some light modification, can be done in about 6 working days. So we're incredibly fortunate to have that sort of opportunity to redeploy kind of tired assets. And for the way that those units had sat on our books for many years, they were completely unappreciated as far as our asset class, right? They held very little book value for us. Mm-hmm. We are only capitalizing the input cost, of course, the incremental capital to refurbish the units, but again, that's paying back. It's in 58 days.
Mm-hmm. And give us a sense of what are these, one of these things cost to build?
If you're to build from scratch, and so we've kind of done the loose math on it, whether, if we get to the end of our 40 units and there's still momentum, what is the cost to go build one of those units? It's roughly about 125,000 Canadian to 130,000 Canadian, but our conversion is much less than that. So that's why I think for 2025, our indication of the market is that we'll stick within our color within the lines here on those 40, and then go beyond that should the market still demand them.
Good. And then give us a sense of the sales process. How do you go up to a customer and get one of these units in their hands?
We're incredibly fortunate in that we have a high functioning sales team already across both of the Canadian and US markets. And then we work with it's a couple of agent groups for international business. Largely those kind of communication paths had already been predefined. And obviously the past relationships and knowledge of our CleanSteam technology kind of paved the way for an easy conversion or easy conversation into the EcoSteams. So we had about 2.5% utilization, and so on the traditional CleanSteam. So I mean, there still was a level of familiarity in incredibly remote locations. Some operators were still willing to burn diesel fuel if they were in a real logistics crunch. So we would get a periodic deployment of a unit, but the fact that we were able to convert them to natural gas has only made them so much more attractive to the operator base. So we've exploited those kind of previous or ongoing conversations, and obviously so many of the customers that we engage to talk about the EcoSteam and DZ also are engaged in businesses that would employ our solar hybrid business or our Halo business. So it's very much the same customer base. So that makes things much easier.
And maybe talk a bit about the competitive landscape. Are you the only one that's out there doing this? Are they smaller, bigger players that you're dealing with? What can you tell us?
Yeah. So evaporation isn't necessarily a new approach. I think it's one that's been met with a lot more vigor in the last couple of years. We do have some kind of small size competitors in the US that we can work alongside. Their solutions are slightly different in the way that they've approached it. We would predate their solutions, and I think we've got a couple of very unique elements of our design that make us very well fit for the smaller and mid-sized deployments. But as I mentioned, we will kind of the next investment phase or the next research phase will be in and around large volume. So we'll look to kind of reconfigure. Canada, I think we have an incredible opportunity here, and that I think we're the preeminent name in evaporation. So, and I think that's again we have that to be thankful to the legacy organization for establishing that. That's not something that's done just recently. So I think when most operators think of wastewater evaporation in the energy market, it comes back to us.
And then as investors paying attention here, what would you say to investors in terms of your capital requirements? You got some debt that you talked about you're going to try to shave down, but I mean, do you have a need for equity? Are you looking for money? What can you tell us there?
We've entertained, I mean, one of the, as I mentioned, kind of our three-part approach, one of the things that we were really focused on was creating some awareness. I mean, we had met depths of share pricing at around 9 cents. So we were working our way back, and obviously raising money at 9 cents was a non-starter, but I think through our paying attention to our fundamentals as a business, making sure that we're promoting that actively with the investment community to know that we are paying attention, and getting our kind of level of awareness out to the market, it really opens the doors for something like that. We haven't engaged, I mean, if I'm being very honest, we haven't engaged about raising capital for 2025, but it's not something that I would be opposed to if the opportunity did come about. I think that this is an incredible market to exploit both our public listing as well as maybe some external pressures on entrepreneurs or smaller privates that may want to explore a liquidity opportunity. So we're very bullish about our general internal business, but also about exploiting some of the good fortune that we have in our mechanics. I mean, it has become, I think, a tight market if you were a small private energy service company or industrial company. And I think that a public listing like ours is very attractive, I think, to that space. So, And again, we've got when it comes to CapEx guidance, we provided guidance of roughly $1 million. That was building up the full 25 units on the EcoSteam, and then also expanding our fleet of Halo units. If we continue to have the momentum that we've experienced in the last several months, I think we will indicate far before we ever expand that CapEx budget. But if we continue the momentum, I won't be shy about press releasing my intention to do exactly that, and then gauging our interest from our customer base.
Mm-hmm. Now, Riley, you obviously have a couple different products here, different sort of sectors that you're going after, or different services you offer. Where do you think the most focus can be put here?
Yeah, and I think we're very fortunate in that we've got a bit of diversity as far as our footprint. We've seen a very strong activity level in the latter part of 24 and 25 in our Canadian market. And we've, like I mentioned, we've had a strong resurgence in our U.S. sales and momentum. So if I'm looking at the macro climate, I think that the U.S. is probably our biggest area of interest from Q2 as we enter into breakup here in Canada, and for the kind of foreseeable future. I'll be very interested to see what the Canadian activity levels do post breakup, with all the noise about tariffs and the uncertainty that that's introduced to the market. We are, however, if that does come to fruition and we are under pressure from a Canadian perspective, we won't hesitate to move assets to the U.S. and look to expand upon our operations down there. So we're very fortunate. We've got long-standing legacy teams there that we feel we can scale with on either side of the border. It gives us a little bit of flexibility as an organization, and I've talked to so many organizations that are maybe Canadian-centric, very nervous about what the remainder of 25 looks like. I'm not nervous about it. It may mean that we have to incur some transportation costs, but we will pursue utilization as an organization throughout the remainder of the year.
Mm-hmm. Now, you mentioned the tariff word, which I was going to ask you about. Do you guys see any impact from all the tariff discussion right now?
We moved assets early in the year. Obviously, as the noise around the tariff issue began early, we took that opportunity to move some units. And I speak more specifically about our Halo. We moved those south early, so we kind of shortened our Canadian inventory a little bit and moved those south to try and get ahead of anything. That's such a coin toss of how that situation wraps up. I'm still very optimistic that common sense will prevail in that total conversation, and I think the Canadian energy market represents a tremendous amount of value to the U.S. citizen, and I think that bell will ring loudly with administration in the U.S. here. So I'm very optimistic that will come to a resolution here in short order. I think that there's probably a few blows to be exchanged on a political front before then, but I believe in common sense for politicians.
That those words in the same sentence, sometimes that's a struggle. Riley, what do you feel is the greatest challenges you're facing? What sort of keeps you up at night right now running the business?
Yeah, I like to worry about everything. So I don't know. I don't know that I have any one particular thing. I think as we look to scale as a business, there's a lot of moving parts. Although we're a small business, there's a lot of opportunities for us as a business to optimize. I can't say that there's any one thing that keeps me up more than the other. But I like I said, we have beachheads in a few different environments, whether it be the Middle East, the US, or Canada. So there's always more than one thing to concern yourself with and think about it in the middle of the night. But yeah, I honestly, I feel that as an organization, we've really come to a good place. I think the early days of my place in this chair, that there's always that kind of nervousness as you sit into a situation and explore what you've got. And I have to say that I was very pleased with what we found, and I think there was nothing but opportunity. And I have to say that the legacy personnel that the business had are world class, and that's that in itself is such a stroke of luck. It makes things a lot easier for a guy like myself to make decisions and have these discussions with an incredibly informed staff base. So yeah, there's not a great deal I'm concerned about, other than like I said, maybe it's the macro things that we can't control. But as a business, I feel like we've got a lot of internal momentum.
Fantastic. And as investors watching the business now, what do you think are the key either metrics or maybe even catalysts we should watch out for to determine how well the business is going?
Yeah, and I think so. I would say the new initiatives. I mean, we've got tremendous momentum in our legacy product lines. I think that the increased utilization of our units and the expansion of our fleet and halos, the conversion of our EcoSteam units, and then the emergence of our international business. Those are all incredibly exciting components, internally driven components of our business. And one of the other, I guess, from an external standpoint, one of the other things I'd be very excited to watch is the acquisition market. I think that there's, as a business, as I explained, I think we've got some attractive elements to our business that we won't be shy to market. And if we can roll up an entity here, a sizable entity, and really lever that public listing, I'd be very keen to do so. We've got our earnings coming out here very shortly. I think investors will, without giving away too much, I think investors will be encouraged by some of those results. And I think that, we'll continue to really focus on the fundamentals of the business into 2025. That's what I take real pride in, is making sure that there's structure in the business and that there's, we're doing things in lockstep. We're taking risk in lockstep with reward. And I feel that approach resonates well with the employees in the business. So when you get that feedback that you don't feel like you're hampering the business by taking that conservative approach to things, that feels good as well. Your line.
Awesome. Did we miss anything? Is there something we should have talked about that we haven't, or a question I should have asked that I haven't?
No, I think there's been the market has been a strange one for the last little while, and I think that there's a real kind of subset in the market, especially in these microcaps, that businesses that have a sustainable angle but also generate value to their customers and to their investors. I think that that's a very unique Venn diagram that we check the boxes on, or that we color in the center on. There has been a lot of kind of aspirational green things, but I think we take a lot of pride in our practicality and our approach, and the fact that our solutions actually work and they actually produce profit for investors. So those are, those to me are very comforting facts as a business, that this isn't just a fly-by-night idea. This is a long-established business that we've kind of found some new energy within.
It's always encouraging to hear CEOs talk about profit and growth. It's a lot rarer than people realize in the microcap space. So I appreciate that. We've been speaking with Riley Taggart, CEO of Cleantek Industries. Riley, listen, it's been great to finally get you on here and get to discuss the company. And we look forward to paying close attention, hopefully catching up in the near future.
Well, thank you so much for having me. This has been fantastic. And I look forward to any inquiries. If there's, be keen to do it again down the road.
Sounds good. Thank you. Bye for now.
Take care.